So good evening to all the viewers, and first of all, thank you for giving your time to JM Financial for hearing us out on our webinar. So this monthly webinar, the whole objective is to help you tide over the month of August. So if you recollect, the last 4 to 5 weeks have been pretty challenging for the Indian markets. If you see the index, which is the Nifty index, week on week, we are noting a corrective action in the Nifty. Slowly and steadily, there has been a drag down in the Nifty index from the swing highs of 26,000 odd levels to around 24,600 where we close today. That is where the fate of the market lies. So really, if you see the broader markets too, the news flow is also not boding well for the market. So India has been pretty resilient in the last couple of months, be it the geopolitical tensions, the war, the tariffs. So these things all have kept the market on a very on a slippery footing, you may say. But we have held on. But the month of July was a month where the markets did slip a bit. We have lost around 800 odd points from the swing highs, as I mentioned. And the recent US-India tariff, which came out as a surprise on the monthly July-August expiry day, did shake the markets because 25% tariff on India plus some penalties, that is the talking point, and that has a sentimental negative impact from the short-term proceedings. Also, the quarterly results of majority of the companies till now have not seen a thumbs up from the market. So most of the price action post the results have seen some weakness in majority of the stocks. The overall market breadth is bad. So really, how do the things shape up for the month of August is what the key address will be in this coming webinar, which will be for the next 10-15 minutes. So to start off, first of all, I will like to share my small presentation to you. So if you look at the first slide, if you look at the chart below, which is a candlesticks chart of the Nifty price action, we can easily see that in the last 4 series, that is in the prior 4 series before the month of July, Nifty had seen a consecutive gain, a one-way move. हमने 22,000 से लेके 25,600 तक एक तरफा रैली देखा निफ्टी में. After that, this is the first month where we have seen some heat in the market, some pressure building up, a loss of around 780 points from the swing highs of 25,650. Now the talking points from the derivatives angle was the India VIX. अभी India VIX वो चीज होता है, we call it the volatility index, in other words the fear or the greed index. It tells us what is the sentiment of the market at a given time. So a few days back, there was a talking point that VIX is trading at its lowest point, which is around 10.5 to 11%. So VIX actually has a negative correlation with the market because VIX goes up when options are bought and cools down when options are sold. And normally options are bought when you anticipate a big move in prices on a directional front. Now, considering the one-way rally which the markets had the August month seeing a slight slowdown, the chances of VIX picking up were more on hedging or put buying because one-way move and the entire geopolitical and the tariff news doing rounds has kept the markets on the edge, and probably VIX picking up a bit from the base levels of 10.5 to 11% is a first level of caution that from here the option premiums are very cheap and really doesn't make sense as an option writer to get into the business of writing at such low premiums, because at such low premiums it is buyers who slowly start getting active in the system, and if you have a big directional move, it is very hard on the option writers. And normally if VIX move and the Nifty move were to be correlated, if VIX does pick up from here for another 10%, you can anticipate a fall in the market which can extend further. So this is the first level of caution which the derivatives data had hinted a few trading sessions back. Nifty की rollover अगर आप देखेंगे तो 76% was the rollovers of Nifty compared to the 79%. So 76% is a tad lower than the historical 3-month average readings of the Nifty. What my understanding is that if you see the entire month of July, there were short bets in the system, and a low rollover possibly means that majority of the short bets have not been rolled to the month of August. So that's a silver lining, that somewhere the market is near a short-term bottom from where there can be some buying intent. अभी अगस्त के लिए हम कैसे मार्केट देखते हैं इसकी बात करें तो अगर आप निफ्टी की प्राइस स्ट्रक्चर अभी देखें तो देयर इज अ वीकनेस. The RSI on the technical charts, which tells us whether at a given point of time the price charts are overbought or oversold, is around 40% which means there can be some more fall or another slight round of correction, because RSI getting below 30 is the first level of caution that things are oversold. Second is the options data. Now options data somewhere 24,500 has some put writing interest, but the majority chunk of put writing for the monthly expiry, that is 28th of August, has highest OI placement at the strikes of 24,000 inputs, which means that traders at this point believe that there is a very low probability that Nifty is going below 24,000. We are almost 500 points away from what we are talking of, but people have started writing puts at 24,000 on an anticipation that this will be the possible base for the month of August. अगर आप अभी देखें तो टेक्निकली 24,400 से 24,500 दिस इज अ शॉर्ट टर्म सपोर्ट. अभी आज 24,555 पे क्लोज हुए, सो मंडेज सेशन विल बी क्रूशियल टू सी how Nifty reacts at its intermediary support of 24,400 to 500 zone in case there is a slight selling intent on Monday's trading session. कॉल राइटिंग अगर देखेंगे तो जो रेजिस्टेंस जिसे कहते हैं हम, और जहां पे वेयर देयर इज सिग्निफिकेंट कॉल राइटिंग मींस देयर इज सेलिंग प्रेशर इन द मार्केट, सो ट्रेडर्स डू नॉट बिलीव दैट द मार्केट शुड ईदर ओवरटेक 25,000 ऑन द अपसाइड. सो द ब्रॉडर सेटअप as things stand right now, if you are the next week trader, then 24,400, 500 support would be important to you. If this support holds, then there is a chance that markets can stage some recovery at 24,900. There is an event too next week, which is the bank RBI policy on 5th to 7th of August. So in case the support holds, you can expect some round of short covering from the given juncture, where you can see Nifty heading for 24,800 to 850 zone. This is all subject to the levels of 24,400, 500 zone being held on Monday, Tuesdays. That's the coming next trading sessions. Coming to Bank Nifty, the rollovers are more or less neutral, 78% versus 77%. This is because if you look at the bank index, RBI इवेंट जो है 5 से 7 तारीख को, जिसकी मैंने जिक्र की, बहुत ही इंपॉर्टेंट इवेंट है, और उसके चलते थोड़ी सी जो पोजीशनिंग है बैंक निफ्टी में, इट्स ऑन द लाइटर साइड. सो दैट्स द रीजन व्हाई रोलओवर्स आर अ बिट ऑन द एवरेज लाइंस. And the broader technical setup, if you see last 3 months, it's been a broader range. Although Bank Nifty has been choppy, there has been some pressure at higher levels, but it does not mean that the broader or the longer term trend of the Bank Nifty is weak. As of now, we conclude that 54,500 is a support base and 57,300 is the resistance base, and this is how the trading range is expected. You buy near 54,500 and sell near 57,300. This is the trading nature of which Bank Nifty has been subjected to in the last 3 months. That is evident on the price action. Sector watch, हमने जो डेरिवेटिव्स F&O डेटा का जुलाई से अगस्त में रोलोवर्स का जो एग्रेशन देखा है, मींस हाउ मेनी पोजीशंस in terms of open interest build up from August were moved to from July to August were moved. This is what we check in the rollovers data. So we came across this data where there has been positive rolls, या जो जुलाई सीरीज में पॉजिटिव जो काउंटर्स थे, जो सेक्टर्स थे, जिनके एग्जिस्टिंग बाय बेट्स लेके गए हम इन द मंथ ऑफ द अगस्त सीरीज, these have been cement and new age companies. The weak rollovers were evident in IT and finance. So clearly IT sector or finance sector are the sectors where short build-ups have been seen in the month of that's the prior month, that is July, and they have been rolled over to the month of that's August as well. Coming to how the markets are being placed or how the positioning is of different participants. So participants, we specifically talk about FIIs because they are market movers. They are hot money. They dictate the short-term proceedings of the market. So very interesting piece of data. If you see the left-hand side, if you see, it is all about how the cash market is of the FIIs, and how on the right-hand side you will see how they are placed for the future segment. So on the left-hand side, you see continuously there have been 4 months from March to June where buying was evident, and in the month of July there was selling of 47,000 crores. So this is the first level of caution where cash में FIIs ने काफी सारी सेलिंग जो की है वो हमें देखने को मिल रहा है. अगर बात करें FIIs की फ्यूचर्स की एक्शन में, there has been continuous round of selling from the FIIs in index futures. So it's although markets have been going up in the month of April, May, there has been more of selling intent which was evident in the index future segment. Index futures की बात करें तो it is Nifty, Bank Nifty and Financial Service Index. So clearly थोड़ी सी pressure जरूर है from the levels of 25,000, 25,500. That is evident from the data points which we look at if we study the FII piece of data. Now, index long short ratio is what we actively track. Long short ratio means FIIs का आज के दिन में open interest जो होता है, means how many positions are open in longs, how many positions are open in shorts. That is only in index. When I say index, it is Nifty, Bank Nifty, Fin Nifty and the mid cap Nifty. So when you see this data, there is only 10% longs in the system compared to 90% shorts in the system. So that's a pretty huge number, which says that there is a lot of short intent. But as a contrarian indicator, what you can see is that whenever this ratio has come at or below 10, there is a good chance that this ratio reverses. This is what the data has to say in the last few months of trading. So from this data, it is pretty evident that we are at the bottom of this long short ratio, and it is some technical triggers, if activated, can result in a short covering rally in the market. So this is an important piece of data. You have to keep in mind, follow, actively track the long short ratio as it spans out in the month of August, because we are at the lowest point, because 90% shorts in system from FIIs is a huge number. Key support to watch: 25,500, 24,000. So first is 400, 500, which I mentioned at the beginning of my presentation, how markets react at that level. And after that, it is 25,200 if we have any bounce back scenarios coming for the month of August. And the second resistance will be 26,000. Some key events which you will look forward to will be the Q1 previews and results. So majority, I think almost 50% of results have been done and dusted, 50% are remaining. So we will keep a tab as to how these results pan out, because they will have a sentimental impact as to how the markets will move. Because somewhere, if you see this quarter one, IT majors have noted a weak price action post their results. Banking majors have noted a weak price action after results. So this all have been putting a pressure on the markets in the last few days. That is one of the reasons for the recent round of correction in the July series. Global news and tariff will keep you on the edge, because now that India is clear on how much import duty we have to, on the export duty we have to pay to the US, but there will be some negotiations. There may be some changes happening, because that's how the nature of this tariffs have been in the last few days. They have been fluctuating. Things are not constant. So there is where you will have some action. So that is where markets can be volatile. But at least what I feel a positive from this is that the news of India, the exact tariff which we have to pay, that news is out. That is done and dusted, because that was the suspense which was killing the market. And today, since 25% number is what we have in front of us, a penalty is also further imposed on this. That is the question mark, which is a slight, a slight problem area in terms of confusion in the market. But major clarity is there, and I don't think it gets worse from here. So once you have clarity, I think market should or already have discounted this action, and that is a positive which I see from a silver lining aspect in the market. FII flows we track continuously in the market, so long short ratio at its lowest point is what we look at. And bank policy on 5th on 7th of August is important, which will have an impact on the proceedings of the market. So follow and keep a tab on these 4 important items for the month of August. They will have some or a major impact in terms of price action for the August roadmap. Lastly, we always give you an actionable in our webinar. Actionable is always in form of a strategy which we give, since we are addressing our futures and options client. And since Nifty is at its lowest point in the last 4 weeks, we devise a ratio put spread for the August, where we buy 24,000 put. So we are talking about 500 points away from where we are right now. This is a monthly strategy. You buy one put and you sell out of the money 23,900 put, but here it is 2 lots which you sell against 1 lot which you buy. So by doing this strategy, already you are getting an inflow of around 5,000 rupees at the when you start the strategy. And the expectation is this strategy will help you in 3 scenarios. Scenario 1, if Nifty reverses from here or goes up, there is no upside risk. The inflow of 5,000 stays with you till expiry of the month if we trade about 24,000. Second, even if the Nifty turns sideways and you have a scenario where 23,500, 23,900 stays for the major part of August, still you pocket in rupees 5,000 odd rupees, which is our inflow. And the best case scenario is a moderately bearish stance where exactly we get near 24,000 by August end. That will be the sweet spot for the strategy, in which case we can make a potential profit till around 10,000 on this strategy. However, the worst case or the risk in this strategy is if there is a one-way fall, in which case one of our put selling gets exposed to a directional trade, and for that we need to maintain a stop loss which will be below 23,800 for the risk management aspect. I think this is one of the best ways to approach the market. From a monthly perspective, easily you are making an ROI of around 2.5-3% on the monthly strategy if you devise this, because considering the margin of 1.7 lakhs, 5,000 rupees, even if you earn on that, the minimum amount which is promised in this strategy, you are taking home around 2.5-3% on the amount you invest. So this is the broader presentation I had for you for the month of August. We are expecting slight moderately bearish outlook initially for the month of August, but on dips, the dips will be 24,400 to 500, pardon me, 24,400 to 500, that is the first level of dip, and the worst case scenario is 24,000 if it does happen. These two dips are the bottom fishing levels. Ideally, if the markets are strong, we shouldn't be going below 24,400 in the next 3-4 days, and a reversal can see the Nifty once again getting above the 25,000 mark. So I will conclude my presentation and open this forum for Q&A.
How do you find out the FII's activity in the market?
Yes. So how do you find out? There is some data mining which everyone has to do. If you go to the NSE website, today NSE is disclosing this data free of cost, right? So you go to NSE. Under the futures segment, you can go to a link which gives you the derivatives piece, where under futures derivatives link, you can see a Bhav copy which gives you participant wise open interest at the end of the day. So this data comes each day. It is at the end of the day you will get this data which has been disclosed by the NSE. So there are 4 types of participants in the markets: FIIs, DIIs, which is domestic institutions, the props, which we call them proprietary, and fourth is the retail. So in चारों में क्या open interest है और how many positions stand open at one given point of time is what each days of data gives you. Furthermore, they have more simplified it in the sense that Nifty में कितने long open है, कितने short positions open है, वो भी आज के दिन at the given point of time you can figure out. If you have problems getting this data out, and making some basic Excel calculation, there are a lot of free websites. If you just type in or Google, you can get this piece of data on your any of the websites which are free sharing websites. So getting this data is not a problem. You can also just to add, we come out with our derivatives screenshots before the market starts. We are sharing 4 screenshots every day about what FIs are doing, how the open interest is playing in options. These are all in tabular forms, in graphical forms. We have designed it in such a way that you can easily relate it just by a bird's eye view. So these are all shared on our WhatsApp groups, on our emailer. So do get in touch with your RMs or get added on your WhatsApp groups if you haven't, and you will get access to all these screenshots or small reports which are good to start your day, to get a bird's eye view as to how the FII data which we speak of, we have calculated for you. So the calculation part is taken care of by us. All you have to do is just look at the data, analyze it if you wish. We also give our analysis, so that gives you a double perspective on the market data.
How to predict expiry range?
See, expiry range, this range can be on the expiry day or it can be today. So as if I were to predict today, what is the expiry range? What we actually do is, one is you have an understanding of technicals where you find out the support and the resistance, some key points, pivotal points for the market. In case you don't have that expertise, what you have to do is you pull out the option chain from NSE. The option chain will give you puts and calls. Now you have to find the data where the puts have the highest open interest. Just go for the number where the highest number is in puts in terms of open interest, and go for the number which is the highest number in calls. So this highest number in puts is the open interest, which is the support. Now we call this support because normally in options it is the writers who have an upper hand, because the probability of them winning the game are higher, and options writing is a very specialized expertise. It is only done by HNIs, people who have collaterals, people who can have patience, and even in losses, because options writing is an unlimited loss game, they can afford holding on to their writing bets. So only HNIs normally, or proprietary desk, resort to option writing. So they are the smarter people, and this open interest which I talk of, which is the highest open interest, is an assumption that the writers or the people who define the support and resistance are the ones who are placed at the highest open interest points. So at this point of today, I have to decide the expiry range. 24,000 has the highest put writing and 25,000 has the highest call writing. So expiry range as per today, which is 1st of August, says that 22,000 is the support and the highest resistance 25,000. So expiry range is 24,000 and 25,000. Similarly, the similar piece of knowledge can be applied to the expiry day as well. For example, a couple of days back, the expiry range was, when we started off the day, was 24,700, that was the support, and 25,000 was the resistance. If you see, the expiry was somewhere around 24,750 within the range, although we had a lot of fluctuations in this range, but this is the best way to predict how much the expiry will be and what the range can be based on the options data.
What is the best strategy and with protection?
See, there are a lot of strategies in the market, but if you want to devise a strategy in advance where you get to know what will be the worst case scenario for you, or how much max would you end up losing if things do not go in the anticipated way. For that, the strategies are strategies which I will talk now, are strategies which retail or can connect to, which are not exotic, which are simple in nature. So a simple strategy like buying a call or buying a put. Here you buy an option. If you are positive, you have a positive view on a stock or an index, you buy a call. If you have a negative view on the stock or index, you buy a put. By buying options, your loss is restricted to the maximum premium which you have paid, which you call it an outflow. And if you get it right, your maximum profit is unlimited, which depends on the price of the underlying, to which the option also reacts depending on the strike you choose. Now, a slight twist to this buying call is a bull call spread, where you buy a call and you sell a dip out of the money call. The whole idea is to cut down the buying cost for which you sell an out of the money call. So again, here in this strategy, your losses are fixed to the extent of the outflow which gets you when you devise or construct this strategy. So a bull call spread, vice versa, you have a bear put spread. Third strategy is a long straddle or a long strangle. A long straddle is where you both buy a call and a put simultaneously with the intent that there will be a directional move. Now the question is, you really do not know which way the prices will move. Hence you buy both calls and puts with the objective that the directional move should be so hard that one of the calls or premium should go 3x. That is, your premium should multiply by 3x, and net you end up gaining in this strategy. So straddle is where you set at the same strike price, and strangle is when you buy different strike prices. So these are simple 3 types of strategies where your risks can be controlled, can be defined. If you are using futures as an instrument, you buying futures, again, instead of keeping a stop loss, which you have to because futures are leverage instruments, you can also simultaneously buy a put, so that when you buy an at the money put and buy a future, also to a great extent your risks or losses can be mitigated. So this is how you devise strategies where with a view you can have control over the risk aspect in any trade which you devise.
Can you explain how to select a strike price at any time?
This is an interesting question because many traders end up selecting a wrong strike price. So despite getting the view right on the instrument which they trade on, they do not make an option. So that is a common complaint as to I got my view right, but my options mein paisa nahi bana paya. Because selection of strike is a very key element here. Now generally what we say is that options are a depreciating instrument. With time passes each day, your premium starts depreciating. So the first 10 days when a new contract starts, that is when the premium depreciation is low. And as the time you near the expiry, the premium depreciation starts at a rapid rate. So my sense is when you've done your analytics and you have a view built on a stock, now the choice is, if you have a positive view in the stock. Now to play a positive view, obviously you would use buying calls to play out that view. Now if you are in the first 10 days when a series begins, you can experiment with buying strikes which are out of the money strikes. So how far the out of the money will be how bullish you are on the script moving up by how much percent. So really if you are targeting a move like a 4, 5 or 10%, then you can actually target strikes which are deep out of the money. If you are targeting just a 2% or a 1% move, go for at the money or slightly in the money strikes. So this all applies if you are in the first 10 days when the new series starts. In the last 10 days or a week on the expiry, premiums are very cheap. And here the whole game is, if you go for deep out of the money calls and one single day you don't get the view right, then your premium starts depreciating very rapidly. So you have to be very careful. So I always advise that in the last week of expiry, go for in the money or at the money call. Do not attempt out of the money call, although they look very attractive at the cheapest premiums and the returns can really be exorbitant, but the returns will be the same for your at the money strike as well. So this is how you approach the markets. In the first 10 days, go for deep out of the money strike if you believe the move which you predict is at least 4-5% plus. Otherwise, normally stick to at the money strikes or in the money strikes when you approach options trading.
What are the risks in trading of derivatives? And what are the precautions one needs to take to prevent these?
See, derivatives as such is a risky instrument, right? So we are talking about, first of all, when we talk about equities, we are trying to get easily anywhere between 12 to 15% on an annual basis. Now, derivatives is a product where, it's a leverage game. Leverage game means you put a certain sum of money, let's say example 1 lakh, and you are trading in a market which is leverage, which is 3x, maybe let's say 3 to 4 lakhs. So clearly the profits and losses which you bring home is not on the money you invest, but the leveraged or the additional leverage which the exchange is giving you for this lucrative product. So clearly if you're trading in this product, your returns have to be high, which is easily 35 to 40% is what you should aim for if you are getting into derivatives as an asset class, because here the risks of losing high is also significant. So being such a high risk instrument, first of all, a lot of things go into first building the entire game plan before you enter derivatives. So first, have an understanding of the product you are into, understand the lot size of the stock you are trading in. If you are new to options, first do some paper trading and understand how the option Greeks work, how the time value plays out, how the deltas and the thetas come into play, because just by buying calls randomly or selecting random strikes, you are going to end up making losses majority of the time. So understanding and theory is the first play in derivatives. Once you are clear on this, then whenever you use derivatives, I personally say use hedging mechanism. Always have a contra bet. Like for example, you're buying futures, you at the same time end up buying puts. that will hedge you or always save your risk to a certain extent. If you are going for derivative strategies, use hedging strategies whenever. If you are not good at it, first try learning them, do paper trading, and then get into the business of derivatives. So although derivatives is a very high lucrative, high yield making product, the game is what you need to understand. You need to have a trader's mindset and understanding of where to maintain your stop losses, or in case you don't maintain, define your risks before taking any positions. That is the key to survival and making gains and succeeding in the derivatives market.
How to recover from losses, or rather, what are the losses in trading?
See, the loss is, it is an individual perspective actually. For example, 1,000 rupees loss can hurt a student. A 10,000 rupees loss can be heavy on a low income budget person, or a 10 lakh or a 50 lakh loss may not be much pinching for a HNI. So loss is a subjective terminology. It is very difficult to define what loss is, how it impacts. But one thing is for sure, no one likes a loss, right? Whatever it may be. So it is very important that when you are trading in products like derivatives, always when you take up a trade, have a game plan, which I discussed just now. Use options to hedge or build strategies so that in advance, before you place your trade, you know that if things don't go as per what you think, what is the maximum hit or the dent you can take in the trade. So ideally, I would say that if you have a capital of 1 lakh with which you start trading, the whole idea is that out of let's say 10 trades which you take, you have to take many trades. Each trade have a stop loss of, let's say, 2% on the capital. For example, let's say you take 10 trades on a capital of 1 lakh. So 10,000 rupees allocated to each trade. See that each trade, your loss does not exceed 2% of that 10,000 rupees. This is some benchmark which I personally keep in each trade I take, so that there is some discipline approach in your trading. And with a risk reward of 2:1, when I say risk reward, means every trade you take, at least your reward should be 1.5 times to 2 times of the risk you take. If this discipline is strictly followed by you in your trading approach, I think over a longer span, if you assess and analyze how you have been faring, it will be an approach which should help you gain in your trading journey. Thank you.
Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.